a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about international ETFs, and they have been very popular with investors lately. In fact, US investors poured a total of about $18 billion into international equity ETFs, which was the largest monthly inflow according to the Financial Times. And at the same time, they withdrew about $10 billion from US listed ETFs that focus on US stocks, which was the second largest monthly outflow. And this is mainly because after almost a decade of underperformance versus the US stocks, international stocks have been rebounding over the past few weeks, and there are many reasons behind this outperformance. And despite this recent outperformance, these stocks still look much cheaper compared to the US stocks. And so let's look at the reasons. So one of the reasons is a milder winter in Europe, which has allayed fears of an energy crisis. And in fact, the International Monetary Fund, IMF, raised its forecast for economic growth in the Eurozone countries recently. And then the easing of COVID restrictions in China not only benefits Chinese stocks, it also benefits many international stocks. And then the recent rally in the US dollar strengthened a lot last year because the Fed was raising rates aggressively. That rally has come to a halt. So the easing of the US dollar benefits many international companies, particularly those in emerging markets, and it also helps boost the performance of ETFs that hold foreign stocks, because when you translate the performance in terms of US dollars, it is more for US investors, and that is for unhedged ETFs. So we are taking a look at two extremely popular international ETFs that provide diversified exposure to all emerging and developed market stocks in one fund, and they hold thousands of stocks, and they are ultra cheap as well. So VXUS, it is by Vanguard, Total International Stock ETF, very popular with 56 billion in assets and ultra cheap with just 7 basis points expense ratio. And in one ETF, you get exposure to 7,800, more than that, stocks. Includes developed as well as emerging market companies. To learn more, go to the quote page on Zacks.com. You can read our research report and articles, a nice dividend yield too. Then you can use the link to go to Vanguard webpage. This tracks the FTSE Global All Cap IXUS Index. Now you can look at the portfolio and other details. So as I mentioned, 7,877 stocks. Looking at the top holdings, Taiwan Semi, Nestle, TESS, and Tencent Holdings. These are the top holdings in this ETF. Now, if you want to look at the country exposure, Japan, UK, and China get the highest weights in the portfolio. The second one that we are taking a look is by iShares. This is also pretty similar, so it really depends on whether you prefer iShares or Vanguard. There are very minor differences. First is this holds about 4,300 stocks compared to more than 7,800 in case of Vanguard fund. And this is slightly smaller with 32 billion, but still that's a huge asset base and very liquid too. Expense ratio is the same, 7 basis points. And this tracks the MSCI EQUI ex USA index. Again, to learn more, you can go to the quote page on Zacks.com, and using the link, you can go to the external web page for this ETF and look at the top holdings and what else it does. And despite the difference in number of stocks, you will see that top holdings are the same. Taiwan Semi, Nestle, Tencent, and ASML holdings. And in fact, you will get the same kind of exposure in terms of sectors too. And one thing I wanted to point out, which I forgot to point out earlier, that US ETFs, the broad US ETFs like the S&P 500 index ETFs, they have a lot of exposure to mega cap tech stocks. The international indexes are more diversified. So you will see that you get exposure to more diversified sector and different kind of sectors like financials, industrials, consumer, discretionary, and then information technology. But looking at the geographical exposure, you will get the same kind of exposure in these two ETFs. And that explains why the performance is pretty similar. So I looked at the performance over the past year, and these two ETFs have delivered almost a similar performance as the S&P 500 index, down about 8%. But you will see that these have started rebounding over the past few weeks. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. Also, make sure to subscribe to all our videos so that you do not miss anything. And I will see you next week.